So I think that's a great, in fact, that is actually a great tie-in for the next panel. So what I'd like to do right now is ask Lasse, Richard, and Jascha to turn on their videos and their microphones and join me. And here they are. So we are very fortunate. We are very fortunate because when Alice and I began our firm, we set our goal as being to get to know the world's best blockchain investors. And that actually took a long time, but we were very fortunate that we did have the opportunity to meet Richard, Lasse, and Jascha relatively early on in our journey. We wanted global coverage. And so we started off here in America, then we went to Europe and Asia, and we put a lot of energy into trying to figure out who are the best blockchain investors in each of the geographies that we wanted exposure in. When it came to Europe, Lasse, Jascha, and Richard rose to the top, along with a couple of others who aren't with us today. And they are still firms that we deploy capital to. We don't share returns in a public setting, but let me just sort of say that if you had all the data that we had, you would still be following on investing into Lasse, Jascha's, and Richard's firms, and that's what we are doing as we speak. So it's sort of a way of just letting you know that we believe that 1KX, which is Lasse's firm, Greenfield, which is Jascha's firm, and Fabric, which is Richard's firm, are three of the world's best, highest performing blockchain venture firms. And so now what I'd like to do is go down the line as it appears on my screen and have each of you just tell us a little bit more about your firm and your particular take on the space. I know each of your three firms is different and you have different things that you do. So Lasse, I see you first. Why don't you go first? What is 1KX and how do you really focus your energies?
Thank you, Matthew, for having me on. My name is Lasse Clausen. I'm one of the founding partners of 1KX. So we're an early stage venture firm, been in the space for a while, sort of one of the older ones. It started in 2018. And in fact, actually, we were the first of the investment firms in the space that focused exclusively on the digital assets themselves, so on the tokens themselves. Something like Kraken and Coinbase can be good businesses, but for us, they really are sort of traditional business models. They just happen to sell sort of, tokens instead of equities or commodities under the hood. What we really think the big innovation in the space is software networks that are structured as token networks that are not traditional companies in the classic sense anymore, but a little bit more like token cooperatives that live on a public blockchain. And because of that, they are, and I can go into more detail maybe later, sort of our core thesis is called cost of trust, meaning that these open source software networks, they can manufacture trust in a way that typical companies can never do, and therefore disrupt a massive cost of trust industry across the globe. And our mission is to be at the forefront for the next 10, 20 years at investing in that disruption of the cost of trust industries.
Thanks, Lasse. And where are you calling in from today?
Today, I'm calling in from Lisbon.
You're in Lisbon, Portugal. Thank you. Richard, you're next on my screen, and I know Fabric's normally in London, but that you've been traveling a lot. Richard, could you turn off your mic and tell us a little bit about Fabric?
Turn on, I hope. Is that working okay?
Yes. Yes.
Yeah. Good to see you, Matthew, and good to see everybody else. And I thought that was a great intro by Mitch. So thanks for that. And thank you for including us. Yeah, so I'm in New York actually today because we've got there's a digital asset summit happening here. We have other team members here and some folks over at NVIDIA's GTC on the West Coast as well. I'm pretty certain there is not a minute that goes by that there isn't multiple major congregations of folks across the Web3 and the crypto and blockchain community all around the world. So it's pretty hard to keep up with those things. And we'll come back to that, I guess, in the context of what it takes to be successful in this space. So a little background on I guess me on kind of Fabric. I'm kind of trained as an engineer, but was not did not have the aptitude to be a software developer. Built several software companies, and started investing in about 2012. Started investing in this space from 2013, and then created the Fabric brand back in 2017. And have not been exclusively focused on tokens, as Lasse, actually quite, usefully kind of pointed out. I think it's, by the way, it's sort of really, I'm a massive proponent of the opportunity around tokens. It's an interesting particular focus area. So we've not been discriminating in that sense. But nonetheless have been kind of riding shotgun with the opportunity with Lasse and 1KX over that roughly the same time period. And I would say, I would agree, because I'm not going to repeat it, that we think there's incredible opportunity for building these kind of examples of modern mutuals or proponents of collective capitalism instantiated in software that Lasse described. And that's fundamental reinvention, not just of invention of capitalism and reinvention of organizations and of whole business models. And so, that level of disruption, speaks of the opportunity that's there. And so that we're kind of very, very aligned. I think that the only thing I would add to that is that Fabric is a team of folks who have founded companies across what has now become known as Web 1, Web 2, and Web 3, and scaled them, most of them successfully. So we kind of try and introduce that kind of builder DNA to kind of do what we do. And that's how we came at the opportunity in blockchain. So we didn't come out of this kind of really from the perspective of a reinvention of money, or of let alone an opportunity to be involved in these liquid assets and to trade them. We thought that there was a new computing stack or paradigm that was being built that we refer to as the open web, but actually you can also think of as the machine web, and maybe we'll unpack that in more detail. And there are going to be numerous, trillion-dollar companies or projects created within that stack over the coming years. And so that's the investment opportunity, and we think that there's a great opportunity to contribute to something that is reinventing not just things like capitalism, but actually to society itself.
Thanks a lot, Richard. And Jascha, if you turn your microphone on, there you go. And Jascha, I expect you're probably in Berlin, but I'm not sure. No, you're shaking your head. So Jascha, tell us a little bit about Greenfield and why you and Sebastian created the firm and what your particular take is.
Thank you, Matthew, and great to be here as well. It's funny enough, similar as Richard, I'm also dialing in from probably a hotel room in New York, as I'm here for a Digital Asset Summit and a few meetings this week. So yeah, thanks for the invitation. Great to be here. My name is Jascha. I'm one of the founding partners at Greenfield. We are also a early stage focused venture firm, focusing on crypto and blockchain. We've been investing since 2018, mainly from the early stage side. We haven't been exclusively focused on tokens, even though I guess with a very small number of exceptions, all our portfolios across all three funds have been very, I guess, strongly focused on tokens. For us, we do see, similar to Richard and Lasse, we see blockchains as infrastructure that allow us to bring basically any asset on chain and create internet native business around it. We are 25 people spread across all various different hubs in Europe. We try to be very hands-on. I think all Sebastian, so my co-founder, and my background have also been across Web 1 and Web 2. We've built companies, scaled them, and also exited them. So that's a bit also the mentality with which we came to crypto and blockchain. I think some of the support function that we provide to portfolio founders are being with them in the trenches, helping them building, scaling these, I guess, new internet native businesses. And I'm sure we can go into much detail on some of the sectors that we cover.
And we will.
I'm happy to dive deeper.
Yes, we will, Jascha. So thank you so much. These three folks are will give us a lot of insight in the next couple of minutes. And one of the challenges I'm going to have as moderator, obviously, is I could do 45 minutes with each one of you, but we're going to have to do our best to hear from all three of you. So, and I know there's so much insight that you all have. This is a investment strategy conference, and the reason for that is our typical attendee who's on the line right now is either a family office, a multifamily office, or a wealth advisor. Not everyone is, but that's the audience I want us to focus on talking to, Lasse, Jascha, and Richard. So just to get you calibrated, assume for a moment that we're talking to that type of an audience. And the purpose of today is to give them insights into what their investment strategies should be. So we don't need to necessarily explain what blockchain is or why it's changing the world. We need to give them insight to how to invest capital. And so my first question is really about the current investment themes. What are the big themes that you're deploying fresh capital against? Not so much where have you deployed capital, but where are you deploying capital right now from an investment theme perspective? And I'll go through the same order, and then I'll reverse it for the next question. So Lasse, could you kick off?
Yeah, for us, we have four themes, for segments, for sectors that we invest into. The first one is application platforms. So those are, really understood as sort of your layer ones or your layer two blockchains, with a little bit of the caveat that this is a more mature sector. So it's very hard for a team to still have a very, very differentiated, novel approach. Yet, we do have to say that I think blockchain scaling is in the end game, but it's not over yet. So that's one focus area of ours that's really very, very deep tech and sort of infrastructure based. The second one is tokenization. That is roughly bringing real world assets on chain and then using DeFi as a replacement of the backend software of the financial basically ecosystem in the world. Anyone who's ever tried to maybe buy stocks from a non-standard sort of venue, or anyone who's ever tried to even send a wire, let's say, I don't know, from Brazil maybe to Europe, sort of has a bit of an understanding that the software backend of traditional finance of banks is very, very broken. It's mainly running on mainframes from the 70s that Oracle and SAP have been selling integrations on top of integrations for the past 40 years. And and blockchains really are the best databases in the world. They have the uptime that is uncomparable to anything else. And so really bringing assets in various forms on chain and then using decentralized finance from anything to very basic sort of, financial primitives such as borrowing and lending, but even trading. Those are at least a 10x improvements over what we have in the existing financial, ecosystem. Just to give you an idea, around 11% of all stock trades in the world fail in the settlement period. It's up to 15% of bond trades that just fail in the settlement period. Whereas if you take a trade on a decentralized exchange on the blockchain, it's trading, clearing, settlement. It's one and the same transaction. It happens, within a couple of seconds, maybe 1 second. What usually is at least a 24-hour process involving three very, very large firms, right? Trading, clearing, settlement in the traditional financial world. Those are three different firms. They're all huge, and it takes at least 24 hours for this thing to go through. And again, coming back, you do this on a decentralized exchange, it really happens within less than a second. So that would be the second category, which is broadly tokenization. And the third one that we're focusing on is AI infrastructure. We are now getting to the stage where artificial intelligence and crypto/blockchains are meeting in a foundational and in a way that has fundamental value. And then the fourth pillar, the fourth segment that we focus on is consumer technology. I think we've had or we've seen so much development in the usability of this technologies, whereas before you really needed a PhD in cryptography to even just send some coins to another wallet. We are now getting to the point where you just download an app, it it's a Face ID from your Apple iPhone, and you're ready to go to, with a non-custodial wallet. And so we are also really focusing on consumer applications as the infrastructure is getting mature enough that you can actually, less technically inclined folks can use it in a very easy way, the same way that your Instagram app is easy to use.
Thanks a lot, Lasse. That was very helpful. Richard, obviously, we want to know your investment themes. If they're the same, that's okay too. But obviously, they may be a little different. So, Fabric, what are you focused on right now?
Yeah, I mean, obviously there's some overlap. If we were existing in the same environment and not reading the tea leaves in a kind of at least somewhat similar way, that would be a bit strange. But I can definitely have we have a different sort of taxonomy for it, and we'll have a different tack for some of the descriptions. So let's tackle it like that way. So first of all, we talk about just the open web stack that I kind of referred to before. And so those are primarily the kind of the infrastructural components of, L1, L2, some people going down to sort of L0. That's the way in which these transactions get settled, and the way in which that can happen trustlessly, so that you don't have third parties involved, as has been discussed before. We think that we're now reaching a tipping point, where the scalability of that in terms of finality, latency, transactions per second, even it will rival anything that has ever been built before, as well as the scalability in terms of uptime. Actually, Lasse referred to as well. I think don't think people in general appreciate the engineering excellence that has occurred now over this last 10 periods. It's a little bit a classic example of slowly and then suddenly. And so I think that's very exciting. There's still work that's going to be done, I think, particularly to obfuscate both to humans and applications that we exist in a kind of multi-chain world with different layers to it and interoperability going on. So I think that making things human readable and just make it unnecessary for an application that's wanting to use that trustless environment for transactions to even be aware of exactly what's going down on at the kind of lower levels. I think that's pretty powerful. So there's more work going on in that, and we're excited about investing in that. Some of it, not a huge amount actually, but some of it alongside Lasse's team at 1KX. Then on what we call open money, and again, so I'll try and take a fresh stab at that, but the core of that, we used to think about sort of Bitcoin as digital gold. I think it still has that position. I think the core and the kind of the tip of the spear of things that are becoming mainstream and getting product market fit would be stable coins. And so, I mean, it solved a kind of core problem with Bitcoin or any other cryptocurrency, which was the volatility. And I think now that there's now numerous stable coins, but obviously notably USDC and USDT and so forth, these are being baked into a whole tapestry of use cases as alternatives to the mainstream financial system for settlement of payments. But that's everything from intra-company treasury payments that are kind of billions of dollars, maybe just within a company, within one geography, to between smaller amounts between companies, up to kind of Venmo style sort of person-to-person transactions, or between kind of riders and drivers, or whatever it might be within applications. But then importantly, and we'll come back to this, it's supporting kind of like, think of it as nano payments between agents in this emerging AI environment as well. So it's going to baked into that. And as already mentioned by Lasse, and he's going to get bored of me saying this time and again, I think that this will be connected to kind of borrowing and lending in the DeFi environment. I'm on the record as back in January 2018 saying to a group of FT journalists that I think that all of today's capital markets are going to be consumed by these crypto capital markets over time, because they're better in terms of, the different steps to final settlement, as also just mentioned, but they're also better because they're kind of transparent, and you can make sure that things on a transaction by transaction basis are not flouting money laundering laws, are not, evading taxes, whatever. They are just fundamentally better, not just 10x or 100x, but arguably just 1,000x better than what we currently have today. So this is in my view inevitable, and obviously a huge opportunity. I'll measure and brief the other areas. So open culture. I think we've seen a really incredible experimentation around NFTs representing art and identity and all sorts of things, in pictures and videos and so forth, and in meme coins even representing communities and culture. I think we're starting to we'll see a shift towards real-time AI generated video content married to the ability to constantly modify those game or entertainment environments and own a piece of that, resulting in a kind of, and this may, so some parents out there, and this may sound scary, a kind of forever game environment that is going to exist, that it will be spun up and be hard to ever take down. So really, I mean, but is very visually compelling as well as be utterly immersive. So that's clearly a lot of opportunity. And the final one is open data, which is really this intersection between AI and crypto. I think, my second company was playing with machine learning primitives in the kind of back in the noughties. I think if we're going to finally have AI to any degree be autonomous and to learn on its own behalf, we need to have sort of guardrails for that. And so sort of AI is the application in many respects for Web3, just as like the web was the application for the internet. And so Web3 provides this kind of deterministic scaffolding that means we can have AI that can do great things for us and learn itself, but without going off the rails, literally. So that's the way I'd think about it. It's a pretty big opportunity again.
Thank you very much, Richard. That's and I hear the overlap, but that's interesting to hear the slightly different take on some of these issues. Obviously, you've got the hardest job, Jascha, to go last, but investment themes at Greenfield.
Yeah, thank you. Yeah, and I do agree. We do have a lot of overlap, for sure. So similar to Richard and Lasse, Greenfield, we do also have a rather broad mandate. So we invest across what we call infrastructure, so blockchain infrastructure, DeFi, decentralized finance, and consumer through three distinct teams that we look at, I guess, the ecosystem and the opportunity from these three distinct lenses. I think we like to think, generally we like to think in problems that are unsolved in our ecosystems, because we think that the bigger the problems are, solutions to these problems then turn into or translate into large outcomes. And that's normally, I guess, the view or the approach towards which we gravitate. So on the infrastructure side, to name a few examples maybe, that has led us over the last 2 years to focus quite a bit on privacy, because obviously we do think that blockchains are great. They provide a lot of transparency. They are publicly verifiable. They are open. They are secure. They're robust. But if the end goal of all of this is that we'll be bringing every asset on chain, then obviously there is a clear need for confidentiality. So that is an area that we've been quite focused on. The other area that has been a strong focus for us also on the infrastructure side is opportunities around Bitcoin. So infrastructure elements or advancements of the Bitcoin blockchain to basically keep that 1.8 trillion asset, to make it usable across DeFi and smart contracts, not keeping it idle, but actually enabling it, and making it, allowing people to use it in a decentralized and trustless way, which we do consider a big unsolved problem as well. And then I guess I can go into much details on some of these areas as well. On the DeFi side, so decentralized finance, we have been focused quite a bit on, I think, a second or third generation of DeFi protocols that we saw emerging out of the realization after DeFi Summer, that we obviously all realized that decentralized financial protocols do have the opportunity to provide a better, a more robust, a transparent, a more secure financial system. But on the way to that, I guess, end goal, I think also have to realize and acknowledge there are a couple of problems that need to be solved to catch up with traditional financial rails, namely UX, onboarding, offboarding, efficiency. If you look at actually the underlying transactions flows resulting out of a decentralized exchange until transactions actually written on the blockchain, there's a lot of value leakage occurring. So we've been focused on solutions and protocols that actually solve these leakage problems and then bring that back to the user and distribute that additionally. Then on the consumer side, lastly, a bunch of things that we've been focusing on over the last 2 to 3 years. I think right now, a big focus point for us has been what we call attention or engagement networks. So basically, Web3 native advertising solutions that facilitate the transfer of attention between users that are coming into the space and want to explore new products and opportunities, and the many products and solutions that are coming to market and want to grow in a Web3 native way and find new user bases. So these are, I guess, a handful of themes. Obviously, happy to go into much more detail. But again, a broad mandate across three distinct verticals that we cover.
Thanks a lot, Jascha. And for the audience, I just wanted to share a reason why I felt those three answers were so important. Alice and I did an event last week for the NACD, which is the Association of Corporate Directors. We had about 150 or 200 public company directors listening in. And when we got to the Q&A, the first question was, excluding payments, what are the use cases of blockchain? And that's the equivalent of you asking the question during the internet time frame, 94, excluding digital communications and content sharing like email and electronic commerce, what are the use cases of the internet? And you would have missed the whole point. You would have missed the whole point if you had asked that question. And I felt that that public company board director was actually missing the whole point in the way they asked the question, because, and I'm going to give you another example. We have the Game Developers Conference happening here in San Francisco this week. Richard has some of his team here. And just to give you an example, Roblox, which is the firm that creates Minecraft, daily average users 80 million, monthly average users 380 million users. And they've had to build proprietary approaches to moving money in and out of Roblox and Minecraft, enabling assets to be bought by the players of the game. All of that has to run on proprietary technology because a Visa or a MasterCard just isn't fit for purpose to supporting the 380 million people who are playing Minecraft right now. And it's just an example. It's just an example. The scale of what Lasse, Jascha, and Richard and the firms they back are now enabling is something that the world hasn't really got its head around. So the next question I want to ask, and I'll do the reverse order. So Lasse, I know you've been patient already, and you're going to have to be patient a bit longer because I'm going to start with Jascha. But it's to do with your edge. Alice and I believe that there are very few best entrepreneurs and best projects in the world, and it's very hard to find them. And in fact, in early stage venture, most things are not good ideas. They should not be invested in, and they will fail. So it's very, very hard to access the best teams and the best projects. And that, I think, is the secret sauce that differentiates between a world-class firm and investor and a sort of wannabe venture capitalist. So starting with you, Jascha, how do you get to the best teams and how do you find the best projects?
Yeah, that's a very good question, Matthew. I think if you look at the last 5, 6, 7, 8 years in crypto, obviously that industry has gotten a lot more competitive on the venture landscape. Over the years, we have seen, I think, a growing number of crypto native venture firms with, I guess, different flavors and also different strategies emerging. We have seen competition coming from, infrastructure providers, exchanges, or even foundations of some of the larger protocols writing or trying to write venture checks. And also, especially in the last cycle, Web2 firms coming and for the most part also leaving the ecosystem again and trying to invest in, I guess, crypto venture. I think for us, and again, every firm has their different flavors and approaches. I think for us, it's always been a rather hands-on approach. Many of us across the team have built companies, have been part of early stage companies, and seen them growing from inside, either within crypto but also outside. So one of the things that we did 4 years ago, we brought on my former co-founder and CTO as a CTO to the firm, along a small team of very capable engineers and data scientists. So that's an area where we do provide decent amount of value to some of the teams that we work with by running infrastructure in some of the networks that we invest in. And I think that's that's
I think Jascha,
an area. Can you?
You froze just for 1 second after you
okay.
mentioned you'd brought in your sort of hands-on team members that have deep technology knowledge.
Yeah, exactly. Sorry, there must have been something with the Wi-Fi. So what I was going to say that infrastructure, providing infrastructure to some of the teams that we work with and the networks that we are invested with is an area where we do provide a decent amount of value add, I believe, which is important, because if you're an early stage founder, you're going through these steps in the life cycle of your protocol and launching your network, then in the very beginning, you obviously want a network not just to be decentralized from an ownership perspective, but also from an infrastructure perspective. So you want various different types of stakeholders coming in early in the life cycle of that network and helping that, I guess, shoulder that weight and those first 2 baby steps in the very beginning. We are very active, or consider ourselves very active, on the governance side, which is a very different, and probably you could fill a panel session with that topic alone. What does governance mean in our industry, as opposed to traditional boardroom governance in the traditional venture world? So that's an area that we've realized is very important to some of the founders, or many founders in the space, having venture investors and stakeholders that are actively engaging within the community and participating in the decision-making processes by either voting or providing proposals to these governance forums. So that's an area. We have been providing liquidity across DeFi portfolio networks of ours, again, with the purpose of helping to bootstrap these networks and these protocols in the very early days. And I think in other areas that we do a lot of research together with some of the portfolio founders. So I think that in itself is something we've come to realize, that our industry has gone long ago beyond that, way beyond that point where you can just sit back, write checks, and wait for opportunities to come your way. You actually need to fight and compete for every percentage point of allocation. I think we constantly try to reinvent ourselves with some of the things that we can do to provide and contribute.
Thanks, Jascha. And I know that the answers Richard and Lasse will give will be overlapping, so maybe we can do slightly quicker answers. Richard, what's your unique edge to get to the best teams and projects?
Yeah, looking at, as you say, or another way of saying what you just said, I think that we do class ourselves as kind of contributors, and like just cute terms like second teams and so forth that people use. But we kind of believe that was an edge, or an emerging edge, in Web 2. In some respects, we believe it's table stakes in Web 3. It's the nature of the kind of environment. And so, hats off to you, Matthew and team, selecting folks who are all doing that in the space, which is kind of, part of the reason you probably made that choice. And, similarly to Jascha, we build and expand upon our kind of builder DNA. The fact that we've, built these companies over Web 1 and Web 2 and Web 3, and to different degrees, we're kind of a team of founders and CTOs and economists and so forth that can be active in that regard. And on-chain and off-chain governance is critical. That's about making some hard choices with some of the on-chain voting, but also off-chain in some of the companies that we are reinventing some of the structures that these projects work within. So they lifted from the experience of how you have a company that writes software and then puts it into a foundation, and that's how open source operated. But there are even more complex constructs that exist in these ecosystems, and that often presents quite thorny challenges of how to build and scale these ecosystems, and how to deal with conflicts of interest, how to stoke the fires up, while dealing with conflicts of interest. And I think being able to work on those tough problems and sometimes address some of the tough challenges alongside the founders. I think that's an important part of it. We've been writing on the topic in this area since 2013, publishing the thesis since 2017. Most of what we've done and contributed to is either not published or sits behind the founders that we work with. And so I think we continue to do that. At the end of the day, like it or not, I feel like when I stopped building companies, you have to acknowledge you've gone from being player to coach. You're no longer kind of front of stage, and on the stage you need to be kind of happy to take a back seat. And so that's what we have done. But I think there's still lots of work to be done to do that effectively. And I'll mention kind of one or two more things quickly. We work on token economics, we work on talent and sourcing it. We also work on go-to-market. And I think by virtue of some of the kind of pedigree that the team at Fabric has got, we have relationships with everybody, intimate relationships. We say with everyone from PayPal to JP Morgan to Walmart to the UK government to Disney and so forth. And so when you're looking at go-to-market, that's reasonably potent. But at the end of the day, we also have to think about very practical things. Having good relationships with follow investors that are going to write the bigger tickets, follow on, that's pretty crucial. And you've got to maintain those. And then maybe even more importantly in all of that, we try and be fun to be around, for sure, high integrity. And I think it's also appreciated that we've been here for a long time and we intend to be here, frankly, for decades to come. So that's important.
Thanks, Richard. Lasse, you've got the short end of the stick on this one, but you were the first firm we ever found that was 100% token focused. And as I've said, all of these funds, and yours in particular, has exceptional returns. So what is your edge today? What is your unique edge today?
Yeah, I think that focus from day one on token networks, which is a very, very complex structure. It's evolving and sort of being at the forefront of that and basically, growing with that space. And so, yeah, I would really say, we're aiming for, and I think we're doing it, really being the best in the industry at the individual topics. So anything from cryptography, our researchers are the best in the industry, and they're at the forefront of also shaping the narratives and actually helping founders understand the technology. The big difference also is with anyone of our size, and as an institutional firm ourselves, we're the only ones where the researchers are the investors. That usually is separated, and the founders really appreciate that actually get to speak to investors that probably can contribute actually in ways that they themselves were not able to. And so I think that's really the key differentiation, is really that we at topics as diverse as privacy and cryptography to consumer applications, right, which involves a very, very different skill set, that there we really have the best investors in the industry.
Thanks, Lasse. We've got a few minutes left and we've got quite a few questions. So what I'm going to do now is shift over to, I'll ask each of you one question, but we won't ask all three of you to answer each question, so we can cover more ground. And trust me, I'll have to pick who I ask each question of. I think that there's a couple of questions about token investing specifically, and Lasse, I'd like you to respond to these. I think we've been pretty clear here at Blockchain Co-Investors that we don't recommend that a typical family office or a wealth advisor try and do early stage token investing at all, because it's such a unique and difficult thing. But the question for you is twofold, Lasse. The first is, can everyday investors access early stage token investment opportunities, formation and seed? And then secondly, there's a question about the cycle. There's been a lot of discussion, Bitcoin's up, the altcoins aren't. How do you think about token valuations around the cycle?
Yeah, our recommendation would be, unless you're really 24/7 in that industry, I would not invest directly in long tail tokens. I think the safe one is to say, if there's an ETF, then sure, buy it through your Charles Schwab account and hold it for the long term. Anything beyond that is can be extremely risky. And to give you an idea of the edge that funds like ourselves have because of this ability to invest privately. So the return profile actually is phenomenal. And so, 49% of our invested dollars are actually up, only 25% are down. And the multiples on the up, which is nearly 50%, is 17x. All right. And then we have 27%, which is at cost. And so that, if you compare that actually to any other asset class, and especially to direct sort of token picking, this is a phenomenal return profile. But it is because years and years of building our reputation, of building our thought leadership, of building our brand, where we get to lead basically investment rounds at the private stage in the best founders. And so coming to the second question with the cyclicality is, I think that's another part of the job that we do, is actually knowing when to tune out noise and knowing when to listen to it. And so it is because of the liquidity and the daily volatility, even on the weekends, it's extremely exciting, but it also can be a huge distraction. And I think if you are, again, not 24/7 in this space, it usually leads to people basically starting to trade, and we consider that a huge risk. Our general, strategy, we've been very successful with it, is a long-term investing. Now, you have a bit of a sense and a feel for these cycles. And, if the tabloids are printing about new crypto millionaires every day, it's probably not when you're investing broadly into any deal that comes along. Whereas, the Wall Street Journal and, I don't know, the FT are saying that this space is going to die, that's probably when you actually invest. Right. So there's some, sense of for these cycles, and you need to be a contrarian, which again is very, very difficult unless you're 24/7 in that industry and you have that, technical depth to understand of how massively better this technology is. Again, just think of, you're trying to send a wire from Brazil to London on the weekend, and if you understand the actual software and the actual servers involved in the back end of trying to just send a dollar, back and forth, and then understanding of the technical excellence, as was mentioned before, that has been produced in this industry over the last couple of years, that sort of gives us as a long-term investor also the conviction to really be counter-cyclical, to be contrarian and invest when you have those cycles and the markets are down.
Thanks a lot, Lasse. Jascha, we've got a question about European developers. Are they fleeing for or returning to the US? Are the US developers still coming to your neck of the woods in Germany and elsewhere? What are you seeing on the ground in terms of the best blockchain and AI engineers?
Yeah, that's a good question. I think if you look at the last 4 years under the previous administration in the US, there's clearly been a trend, especially I guess on the edges of Europe. So we saw that through our team in Lisbon, that there's been some shift from US or East Coast based developers coming over to Europe. And I think in general that has been also one of the reasons that led to obviously now a much more welcoming and much more constructive environment here in the US. We don't see that movement the other way around at the moment. We also see that a lot of the teams that have been in Europe before are deeply rooted in Europe. They have built organizations, they've built teams. In many cases, these teams are remote to a certain extent anyways, but the teams that have been building in Europe, from our observation, are deeply rooted here. Some of them have families, others have, I guess, other circumstances in their life. So that's something that we don't observe quite yet. I mean, one thing is for sure, crypto has always been a global industry, irrespective of where a certain team is based or where certain developers are based. If you look at the difference between growing and scaling a protocol and a traditional company, even out of Europe, which is obviously a large market, but a market that is very fragmented, we've never had that structural disadvantage in crypto that you could, potentially see with traditional businesses across Europe, which is language barriers, different jurisdictions, countries, borders. A protocol is basically, no matter where it's being launched by a team in Lisbon, in Berlin, in London, in New York, in Asia, this is global from day one. It doesn't know any borders. It only speaks one language, Solidity, based on in the EVM ecosystem. So I think that's a bit the way we look at this. Obviously, sourcing is important for us, and we've started to attempt to see that we can source easier in the areas where we have people on the ground, but generally crypto has always been a global movement, which is not limited to one specific market per se.
Thank you, Jascha. And just to close the panel out, Richard, bring us back up 100,000 feet. Is now a good time for an investor to deploy capital into this space?
Yeah. Yes. And why? Because I think there are some incredible tailwinds that have just, struck up for kind of Web3 in general. I think the lead and more exciting one has got to be AI. As I said before, in many respects, AI is the application for Web3, just as the web was for the network that was the internet. They fit together hand in glove, yin and yang. It's incredibly powerful. That has not been clear to many people for a long time, even folks extremely close to the space, like one of the co-founders of Ethereum, Vitalik. I think even just over a year ago, it was still becoming clear to him exactly how tight that interconnection was. But now I can see this becoming mainstream thinking, and all the projects are coming from that to build the infrastructure. How do we serve up all these massively costly resources around, specialized silicon, like from NVIDIA, the GPUs? How do we serve up the data? How do we do the training on a decentralized basis? How do we govern all of this? All of this, we can bring to bear the lessons and capabilities of Web3 to do this more adaptively, more economically, more intelligently for this era of AI that we're entering. So there's an enormous application tailwind with many sectors, healthcare, finance, whatever, that are going to, and so forth, that are going to be impacted. And I think we mentioned again already, it's been slowly and suddenly. We now have, the settlement layers where these transactions are settled and digital ownership takes place that scale on every dimension and are usable because they're abstracted. So you don't have to be a hobbyist who enjoys playing around with these technologies to do it. And the third element, hopefully I'm still there and haven't paused. We still need to upgrade the interwebs in different areas. The third area I think is powerful is just regulation. And it's not just about the Trump administration bringing in a more benign SEC and so forth, although that's important. The legal cases have been dropped against Coinbase. That's, important marquee event. But it's the fact that any of the other jurisdictions in the world who squandered the time during which the US was coasting a little bit better pay attention now, and will be paying attention and competing to provide benign environments for, this type of digital asset innovation. And that includes the UK, across Europe, the UAE, Singapore, Hong Kong, in this very global movement. So I think those three important following tailwinds, just speak to the size, the magnitude of the opportunity of the next 2, 5, 10, 20 years.
Thank you, Richard. So let me just close this out. Lasse, Jascha, and Richard, let me just say again, we're very happy limited partners. You've made us a lot of money already, and we want to thank you on behalf of all of our investors. And then secondly, I can't solicit or anything like that on this webinar, but I can share the fact that we've re-upped with all three of your funds into your new funds. And I think if you're an investor on the call, hopefully that's the best thing I could possibly say as we thank Richard, Jascha, and Lasse and say thank you very much. We really appreciate everything you do for us and our investors. Thank you very much.
Thanks, Matthew. It's been great
Thank
working
you.
with you.
Appreciate it.
Thanks,
Yeah,
Matthew, and the whole team.